Hello, hello, hello. Happy Tuesday. How's everyone doing today? Good morning, Sterling. Good morning, Patrick. Good morning, Options 22. Welcome back. Long time no see. Thank you for putting the news in, Sterling. Good morning, PMG. What else we have? Good morning, Daniel. Good morning, David. Good morning, Harold. Good morning, Royal Palms. Remind me at the end. Good morning, John. Good morning, McRangers. It's always important to say good morning to people. Good morning, Charles. Good morning, Jake. There we go. All right, we'll wait for some more people to come in. So, we shall see. Yesterday was watching for the capitulation bottom. Looks like we have it based off of that. Still, I'll give you the key levels I'm watching for and exactly what I'm looking for. So we'll see how we get followed through there. Good morning, Tony. Is this like means we're going to stream to all-time new highs? Probably not. The probabilities have to tip. We'll be watching this as a tradable bounce. A tradable bounce. Good morning, Andrea. Good morning, Martinez. But not necessarily a long-term bottom. All right. So what do we have? We had NFIB optimism index coming in below consensus. We had Redbook, huge bounce in Redbook. Remember, that's large retailers. I think this is due to tariffs pulling things forward. Like people are rushing out to buy iPhones and everything else. People are rushing out to buy, the big screen TVs from Korea and stuff before these tariffs were hitting. Demand got pulled forward. That's why I think that was such a big bounce in there. Other than that, we have nothing besides whatever tariff news comes out today. Remember, we had Trump saying yesterday he's going to put another 50% tariff on China unless they drop their 34% retaliatory tariff. So we'll have to see how that plays out today. We got Daly speaking this afternoon. So that's where we sit there. What else? S&P 500, green. As opposed to yesterday, which was red. So yesterday, before we had the fake 90-day pause news come out, which started to trigger, but it was, again, I was watching for the some kind of bottom formations, and then we got momentum off of there, and then we held above key levels on the pullback, mainly the 62.5% retracements. So definitely looking for buys. Now we're following through today. You can see everything's green today with financials leading the way up. Fed Watch tool still has 4 rate cuts priced in, like the economy is going to fall off a cliff, and it may well with tariffs. But I don't know if the Fed's going to be able to cut 4 times this year. Fear and greed still an extreme greed, but something's tilted with that now. And Schiller PE, people are saying this is a dirt cheap market. 31.25 in the Schiller PE is not a dirt cheap market. Getting back down to somewhere 20 or below is getting to a dirt cheap market. So this is definitely a tradable bounce. We had Walgreens Boots coming out this morning, but there's nothing that's going to be market moving. Tomorrow we got Delta in the morning and Constellation Brands in the afternoon. But again, earnings aren't driving anything right now. Good morning, Andrea. Good morning, Jacob. Good morning, Ted. All right. So here we go. I'm watching for a return. First key level is yesterday's high from the spike up high with the fake news of the 90-day pause that it was being considered. So that's my first key level. We get beyond there, I'm watching for a return to the rotation zone. A minor level for me is a cluster. We have the projection cluster to yesterday's high. We're right around 53.40 area. And then I'm looking at 53.85 to about 5400 as the next key level. That would return it to the rotation zone. Remember, if I zoom out to the weekly, all this is still below the major breakdown zone. On a continued rally through there into the 50 to 62.5 from the sell-off. Remember, that's a key rollover area. We have a very key area we'll be watching is 55.70. The only thing that tips the probabilities at this point is a close about 50, what is that level? Let's zoom in exactly. 56.66. Uh-oh. We got triple sixes in there. So 56.66 at this point is the only thing that tips the probabilities back to where we could retest the highs. And that's not even taking out the highs. So the market's got some heavy lifting to do, and there's lots of stuff in the way. This very key level is this 55 level, also very near the top of the daily rotation zone and the breakdown zone. So I'm treating this as a tradable bounce and only into something more if we get through that 56.66 level. Now, on the pullbacks, the key pullback. So we were basing sideways. This was what I was watching for with the overnight price action. We started to break out this morning. You see this, we based sideways right below the spike high yesterday, holding the 1 hour rotation zone, and now we've broken out. So I'm paying attention to the bottom of the rotation zone and this little support shelf. If something negative tariff news comes out and we were to start selling off, as long as we remain above, just remember 5,000. As long as we remain above 5,000, which is a 62.5% harmonic from yesterday's or Sunday's lows to yesterday's spike highs. And you see it also is within this volatility support shelf. You see right here? So not only is it key because of that support shelf, it's also key because it's a 62.5. So as long as we don't close back below that, I'm treating this still as a tradable bounce. Does that make sense? Good morning, Heinrich. So next two posts, interesting for SPX options data from yesterday's market. Today's 0-day activity was relatively low, again for only 36% of SPX options volume. Below the 47.75 strike, liquidity starts to dry up as far as strike availability. It's reasonable to expect bid-ask spreads to stay wide at those levels, driving lower volumes. Yeah, well, it's going to get interesting if we did close back below this 5,000 area. But if for the time being, we're not there yet. Again, anything can happen today, but we've came from very oversold conditions. And this was watching for capitulation moves, which it appears we've got. Now we need to see some follow through, at least to the daily rotation zone. Hey, Richard, how you doing? So that's my roadmap. The NASDAQ, same difference. I'll just go through pretty much same analysis. First key level to me is this 18,600. We have a cluster there right here. We get beyond that, I'm using the minor harmonic of 18,850 area, and then I'm looking at about just above 19K. Just above 19K as the next little minor area. I'm going to bump that up about 19,150 to about 19,500 as a very key resistance zone. A very key resistance zone. The critical tipping point level for this, again, same thing, retracement harmonics, looking at, let's give you the 17,173. 17,173 is the very key level. And you also see how that's the 62.5, but look how it lines up with that volatility shelf. The spike up, the retracement, and then another spike up. And that's very key. So in any pullback, that's what I'll be watching. Other than that, keeping an eye into the open on any pullback that we hold the 1 hour rotation zone. Dow, same thing. This is not a double top, by the way. It's just two tops. That cannot be traded as a double top, so don't even think about that. Just watch that 1 hour rotation zone. If the Dow starts breaking above yesterday's highs, the really major area is 40,300. As it makes new highs, you're going to have to ratchet up to 62.5 level, but as it stands right now, it's 37,728. The Russell also completed the little double that yesterday the S&P and Dow got invalidated. The NASDAQ and the Russell were not invalidated with the doubles. Same difference here. I'm just watching with the Russell specifically, I'm watching yesterday's high with the declining rotation zone is the very key area. On any pullback with the Russell, just be looking, do the high to low to yesterday and use the 62.5, which would be 1794. VIX continuing to drop. Going to be paying attention to yesterday's low, which is also the 50% retracement, which we bounced off of. Then the next key level is 33.16. Again, I'm going to treat this the same with the harmonics. 33.16. We start closing below that. I'll start watching for a return, much lower volatility, and a continued rally higher. DAX bouncing up, regaining the 200. But again, on this continued area, I'm going to be watching the daily rotation zone also in the DAX. This is interesting. The notes. The notes, these are just a pure note futures. Now, it spiked through the first target and dropping massively back down their breakdown zone. The key thing that would invalidate this now is 109.27.5. We're not close to it yet. We're coming into a very major support area, but I'm keeping an eye on this because that's a rapid reversal. The yields, it did not technically hit the first target. It missed it by a few minor percent, but since the notes hit it, the note futures, which are more heavily traded than the micro yields, by the way, much more heavily traded. And we had the double bottom yesterday, which played out very nice. I have lowered the invalidation point, the stop level on this. Now, it would have to get through all this resistance, but there's now a fair amount of upwards pressure on yields again, returning into the same area before the tariff, we'll call it the tariff tantrum. Okay, so going to be paying close attention to this. It really needs to start breaking below 41.15 before I can resume at least a short-term bearish position. Dollar index going to be watching. So far we're basing. We've returned to the breakdown zone. We've returned to the rotation zone. Now I'm paying attention to yesterday's high. If we break above there, we could return to consolidation here, and we might have put in at least a short-term bottom in the dollar. If we roll back down, I'm looking for a stronger bottoming pattern. Either way, I'm looking for a bottoming pattern, at least in the dollar index in the short term. Crude, watching for to build more of a base down here by the harmonic. On any bounce play, yesterday's high is very key. Gold. Technically, in the volatility yesterday, closing slightly below the 62.5, but I'm paying attention to this rotation zone and looking for bullish, short-term bullish bounce plays still in gold. Still looking for short-term bullish bounce plays in gold right now. This is sort of a very messy double. Very messy because of the lopsided nature, but you can watch the high from Sunday night. You can still watch the high from Sunday night. If this does roll down, it could form a better, really strange double still if you ignore the high from Sunday night. I'm just paying attention to that for the key bounce play. For short term, long term, nothing's changed. We finally reset gold to the weekly rotation zone. Okay? Which the last little pullback at the end of February was straight to a weekly rotation zone, and then we got the bounce up. Now, does this mean all's hunky-dory, and on any bounce play, we've got a guaranteed low in? No. On gold, on the bounce play, I need it to get back above 31.15 on any bounce play. What else do we have real quick? The yen. This is interesting. Yesterday spiking down, but not closing below the 62.5, and today regaining it. So I'm going to keep a close eye on that. Or sorry, that's the weekly. Yesterday coming back up. The daily did close back down, but we've regained it really quick. I'm still watching for a stronger bottoming formation for a rollover back to 75. We'll get to some others. Euro, I'm going to be watching for a more, remember we finished the 87.5, watching for a more substantial topping pattern in the euro. The spiders, pretty much the same analysis as the futures. Keep an eye on yesterday's high, a break through this very key area from yesterday's high. Then we have a gap fill and the daily rotation zone. So, mid 536's area. The full gap fill is still technically 536.70. Same thing, you just use your retracement levels to know if it tips below that 62.5. The Qs, again, the next key level, the next very significant level on the continued rally is 450.66, which is the gap, and just above that is the declining rotation zone. Bitcoin, little bounce back, hitting the second target yesterday and bouncing off of it. But that's about it. Nothing else to talk about there. You keep asking for C, Royal Palms. Again, in the short term with C, got a lot of overhead resistance. And look where the 62.5 is. Look where the 200 is. So first thing on any continued play would be for this gap fill, 63.05. Then I'd pay attention to the 50% retracement and the rotation zone, 65.29. 65.29 to about 67.75 is a very key rollover zone. It would have to close above 63.75 area for me to continue to be bullish on that, which is also right near the breakdown zone. Look at all the stuff in here between the 50 and 62.5. So, yes. Is it a tradable bounce? Yes. Is it, I got to back up the truck for Citigroup? No. Also, did anybody see this? Did you see this, Sterling, yesterday? Remember, we had adhere group, which one I brought up a number of times because of its dividend play. Gapping down, pretty much the target area for the double and the 200, and then the strong reversal yesterday. Wondering if anybody who is watching that, because remember, we talked about this as a potential. This triggered last week, and there we go. There we go. So, that didn't give much time to get into it. What else do we have? Yes, technically you have a weekly. This is a weekly. Potential double bottom on Tesla against the weekly rotation zone. So that's the only thing right now that would get me watching for a more bullish play in that. Would be need a weekly close above 291.85. Other than that, it would just be bounce plays for potential rollovers again. Not much has changed. So that's where we sit. There's going to be a lot of people just rushing into things thinking it's buy the dip. Now, I'm not saying it's buy the dip, but if you're going to be a dip buyer, know what the key levels. Know what the key levels that it has to get by to tip the probabilities back that we could continue to run higher. There's lots of overhead resistance in a lot of things. Okay? Like Apple finished its double. There's Apple finishing its double and also returning to the weekly 200. Is this a fantastic? Tariffs are going to hit Apple pretty hard. Is it possibly a tradable bounce? Yeah, but look at all the overhead resistance it has to get through. And that's not the first thing I'd be looking at. Amazon. Could be a tradable bounce? Yeah, but look at all the breakdown stuff. And this had already, look at the big breakdowns before. This is the tariff bit. Look at all the big breakdowns before. That even on a bounce, even on a bounce, what happened there? Okay. What is going on here? All right, there we go. Even on a bounce, you could just return to the breakdown zone. The breakdown zone before that. So there's lots of stuff that are just bounce plays. Again, Meta. This saw sell off happened way before the tariff tantrum, and look where the 200, look where the rotation zones are. So these are bounce plays only unless it can recover the rotation zone and can recover these breakdown levels. AAP does have a potential double bottom. There you go. May never trigger. Barely ekes it out. May never trigger because your rotation zone's against it, and AAP needs to do some real heavy lifting. But I doubt this will trigger. But we'll see. We shall see. MO did not give a long time to do an entry, but that's why you put the levels on your chart and you set up alerts. So that's where we sit. Let's just peek at the S&P going into the open. Again, looking to retest yesterday's highs. So right now, on any pullback going into the open, as long as it really sustains 51.86, fine. I'm going to be watching to see how it reacts to yesterday's high. It blows through there. Again, we got nothing's changed as to Richard's point. Was that Richard's? Yep, you'll get lots of... Now this, the secondary move would be a thing back down, but we've already had a sideways base, which this is, again, could turn into a nice V-shaped reversal. That's why I was watching this sideways base and the breakout above it. So as long as we don't start a dramatic pullback, I'm watching as this is a V-shaped reversal into the rotation zone. All right, that's all I have for you this morning. I hope everyone has a wonderful trading day. I've laid out exactly how I'm approaching it, and I hope that does help people. With that, I shall talk to everyone tomorrow. Bye for now.